With so much focus on Washington, it's easy for investors to forget that earnings season kicked off this evening with two household names reporting sales and profits for the just completed third quarter. Alcoa, Pittsburgh's aluminum giant, easily beat earnings forecasts thanks in part to U.S. automakers keeping plants open during the summer, increasing demand for metal. Alcoa shares fell in the regular session but rose in after hours. Also reporting tonight, Yum Brands, the owner of KFC, Taco Bell, and Pizza Hut. It missed earnings estimates after a sharp drop in sales in China. The company makes half its profits in the Asian nation. Yum shares fell sharply in after hours. But this is just the beginning. Kayla Tausche takes a closer look at the upcoming earnings season and gives a preview of what to expect.
Washington may be closed for business, but corporate America will be up and running this week when earnings season kicks off. And it could get ugly. So far, nearly a quarter of the companies in the S&P 500 have come out and said earnings this quarter are going to be worse than expected. And in just the last month, Bespoke Investment Group says analysts have slashed expectations for 29 more companies than they've raised those expectations. Just 9 companies in the S&P index will report this week, but they could hold clues for a broader market reaction. Most investors have their eyes on the banks, which begin reporting Friday. Executives have already forewarned about weakness on Main Street as mortgage activity dries up and on Wall Street as trading activity halts. Analysts at KBW say Wells Fargo is most at risk as growth remains elusive for financials. Reuters' Gregory Harrison says that will be the case for all sectors.
I think it's going to be more of the same of what we've seen in the last several quarters. We're looking at pretty slow earnings growth. Expectations are not real high, and there aren't a lot of catalysts really to drive earnings into that more double-digit range.
There might not be catalysts for a while. The International Monetary Fund on Tuesday slashed its outlook for growth in 2013 and 2014. The IMF cautioned specifically about the Federal Reserve's pullback from its stimulus program. As companies continue to wade through the low growth and low interest rate environment, Morgan Stanley analysts say more earnings should beat expectations than last quarter, mostly because expectations are getting lower. For Nightly Business Report, I'm Kayla Tausche.